All right, let's get right into it here. Market is seemingly seeing some abrupt sell-off here in the last hour after the Fed minutes today. It looks like everybody on the internet that I could see, everybody's freaking out. Everybody's talking about recession. Everybody's talking about the market is over. Everybody's talking about the entire thing is preparing to collapse. And let's kind of examine, despite the fact that what we may seem with the market's fluctuation today, let's kind of look at things objectively and see if this market is getting into a more prolonged downtrend, or is this going to be kind of a short-term weakness that could potentially found by some support and possibly a market getting back to its uptrend that we've been in this year. So it looks like this market gapped up initially this morning, as you can see here, and then obviously market was floating rather peacefully, and then all of a sudden after the Fed's announcement and just everything start coming down very abruptly. And this isn't anything new. We've witnessed this in the last couple of years. Every time we see Feds coming out, it doesn't matter whatever they're saying, market tends to react very, very much. Usually market comes more often than not, observing the last couple of years. Every time Fed came and spoke, usually market tanked on that day. So it's very important that we understand that not only each day's fluctuation, but you want to understand a big picture, right? Because think about what happened earlier this year. Think about after the October lows and March lows, how many people are duped into thinking that we're going to see a severe recession this year. Obviously, S&P is still up about 15%, and the Nasdaq is up about 38% year to date. You can see those numbers here: 15, 38, semiconductor 43%. Dow obviously lagging very heavily this year, but nonetheless, market is up for the year to date. But speaking about today's price action, because of with the downturn today, as you can see, we did break below current support. We've been watching here, as you can see, going all the way back to the right here, August 18th, got up, came back down, 25th, got up, and then we seemingly found support there. Just yesterday, we gapped up here. It looks like some of these moving averages acting as a resistance. We just plunged right back down, and we are breaking below that uptrend support. So obviously with the follow through to the downside, if we do see one tomorrow, likely we will, unless there's some kind of a shenanigan upside move. But just the way it closed, everybody's freaking out, everybody's hitting that exit button, everybody's looking for preparing for the recession, and so we're seeing some very, very big red candle today. So it looks like 436.87 is gonna be the next support that's coming from right here. That's where we find the support there. That's 436. And then really, if we do lose the 436, we really have to go back down to the August low. As you can see right here, that was where we found support August 18th right here. So that's 432 or so. And then we got a couple up gaps. As you can see here, we got a couple up gaps. Baby, the bears are eyeing on really everything all started, which we talked about, that island down gap right here. You see that purple box, that island down gap, which I've been referring to as Boss Bear Command Center. That Boss Bear Command, the longer this thing remains open, the more strength the command center for the bear troops is going to accumulate and gain. So as you can see, when we did, bulls found the courage to get back up to battle with the boss bears there. Very quickly, they got rejected, right? They were not even feel really any of it. And then with that lower high, falling resistance here, and then we got a couple more down gap. This is a rather big down gap that we witnessed about a week and a half ago or so. And all these down gaps remaining, this one, these are all down gaps, ladies and gentlemen. These down gap continues to favor the sellers.
No, God! No, God, please, no!
So even with the little tiny up gap today that we witnessed on the first hour, quickly it dwindled down and we broken below 436.87, or broken below the 440.14 and that uptrend support here. So looking at the oscillator, also looks to be advancing yesterday, but looks like we are back down, sort of paused here. But what we're witnessing right now, the problem is that oscillator continues to cultivate these lower highs here. Last time when we saw these lower highs, we did witness the price continue to see that weakness here, and this market tanked for about 3 weeks straight. And obviously that's after the island down gap in early August. We're kind of mirroring this, and this is not a good sign, where we're seeing another lower highs on that oscillator here, right? As you can see, when we finally broke out, right, of this lower highs on these falling resistance, on the oscillator resistance right here, when it first broke out right here, we seemingly made that move. So I have to say, as long as this oscillator is bound by this resistance right here, as you can see here, and we cross and we're pausing right now, as long as bound by this, we want to give benefit of the doubt to the sellers. And now looking at this, looking at 65-minute chart here, long-term moving average is there, mid-term is here, short-term is here, micro-term is there. So we're below all the moving averages. And until those moving averages, especially micro-term and the short-term, right, until those moving averages gets reclaimed, because last time when it did reclaim right here, fully reclaimed, bulls were able to make some adjustment to the upside and make about a week, 2 weeks of bullish run. So we want to, until some of those moving averages get reclaimed, until the oscillator breaks out of this kind of coiling scenario, we want to continue to give benefit of doubt to the sellers. 436.87 is the next support. Looks like we might get there tomorrow. 432, 429, we have some up gaps there. Those levels going to act as a little bit stronger support. Keep in mind, on the long term of things, again, as I talked about, the long term of things, just looking at the trend, this entire year, the market is up, right? So I would have to say that trend is trendless right now, starting August, right? We haven't been trending. As you can see, the market has been pretty much in a pause state, right? We made a move, came back down, we made a move, coming back down. We just been moving sort of sideways, hasn't gone anywhere since July. So July, August, September, 3 months. We just been trendless here. Is this gonna become a topping pattern, right? Because a lot of people might talk about something like maybe this is some kind of a very, very wide head and shoulder formation. That's the neckline right here. Keep in mind, that's how this market actually crashed down in early 2022. Is this exact pattern right here you see on your screen, ladies and gentlemen, is the head and shoulder formation. For this head and shoulder formation to fully play out, is you really need to see, observe the neckline, right? So the neckline is really, you see that up gaps, right? Up gaps from here. That's an up gap right there, right? And there's a tiny up gap here. That's where those up gaps from, right? That it gapped up during those time, and those gaps are still open. So for that head and shoulder, if you're looking at this as a major bearish, recessionary, downtrend developer, then I think at least at first we do need to see a continuation, and we do need to see a lower low. It means this low must be taken out by making new low, and in that process, both of these up gaps must be filled. And at that moment, in that process, we're probably gonna see a bounce. And only question is, at the time, and when you do see a bounce, are we gonna get rejected one more time and then get flushed down? If it does and make another lower low, at that time, a huge warning signal. But let's say if this gap comes down and it gets up, and then we start to do something like that, which is also a possibility. right? This is why you do not react emotionally in one day decline, right? This is why so many of you, every single time this entire year, we see a red day, you all of a sudden start panicking, freaking out, and you miss out huge rallies to the upside, right? You just overreact, you micromanage, you choke your positions to death, you gotta allow it to move around a little bit, right? This is the reason why you guys haven't been able to capture anything. So it's very imperative we don't react emotionally, understand the long-term trend.